So this strategy has a 100% win rate with Barclays. And as you can see in the charts here, this includes the 2008 Great Financial Crisis. During this time period here, buy and hold investors lost over 90%. And yet this trading strategy didn't have a single loss here. It's never lost on Peloton. Here's the equity chart. With this stock we beat buy and hold by, well, you do the math. I'm not into crypto myself, but here's Bitcoin. No losses, only profits. It's the same with Ethereum. Here's the S&P 500. Palantir. 2 profits from Meta during 2022's vicious bear market. No losses on 3M. Perfect bottom fishing on Next Era Energy. It can even work on meme stocks. Here's DJT. 2 profits here, and we avoided getting our face ripped off in these huge bubbles. Amazon says there's a rare non-profitable trade. But if you scroll back, way back to the dark ages, back in 2001, it was a weird margin call trade. I've no idea what this is. I've never seen one of these before on TradingView. If you think I'm cherry picking all the winners, well then there's Citigroup. This one wasn't quite so good. We did lose one here. So we had a rare losing trade in Citigroup, but this was in late 2007, just as the financial crisis was brewing. So that was quite a major loss, but then we did have a run of profits. So it wasn't quite so bad in the end. So onto the Pine script itself. The source code of this script is on my GitHub, so have a look in the video description for the link. Incidentally, this is a charting or backtesting script. It's not a screener or a scanner. If you need to know how to add it to TradingView, then find somebody else's video about how to do that. So here it is in TradingView. And if you want to edit the script, then you go to the Pine tree here, and the script is here. So you shouldn't really need to change the source code unless you kind of know what you're doing, want to modify it a bit. So the options are here. You go to the indicator and then click on settings. So the profit target is how much profit we want to make, and this is a percentage. I think really that 5 is maybe the minimum. 5, you can have a really good win rate with this, but obviously I don't know what your dealing costs will be and anything else. You can go up to about 10%, but after about 10%, then you'll find that the win rate goes down quite dramatically. However, your profits will go up, so there is a bit of a trade-off there. 6 or 7.5 is about the optimum for quick swing trading, really. You could potentially use a different strategy using a moving stop loss or something, but you'll have to research that. So the Super Oversold Target is how much the stock falls after hitting the 52-week low. So 20% seems really optimum for most quality stocks and some of the less good ones. If it falls 20% from the 52-week low, then it really is super oversold, so the win rate goes up quite dramatically. We have a really decent win rate on this. If you're looking at ETFs, then you could reduce this to about 7% seems more optimum, but only for the very high quality ETFs. So you can change the number of trading days for the low. If you're looking at 52-week lows, then they are equivalent to 252 trading days. That's how many trading days there are in most years. The exact amount doesn't matter, really. So if you wanted to look at 50-day lows, then just put in 50 in here. We could change this to 10. If we put that in, let's see if the win rate's any better. So the win rate goes down, but we have done more trades. So we might actually end up with a larger profit. But then we lost one here, which was quite bad. So we could try this on SPY. So as you can see on the S&P, now we've done a lot more trades. So you have to be kind of careful of curve fitting with this, but I think this is safe. So let's see, if we did 6% and change this to 7%, And let's see. We'll go back to. I don't think it does those. Let's stay with a 50-day low. So now we've got 16 trades, but since 1993, that's still not very many. So you have to trade lots of different things at the same time. But we have had good profits here. So you could put in a trailing stop or something, and then we could have ridden this huge bull run here. But if you did it on this one, you probably would have got burnt because we made 6% profit, but I think it probably only went up to 10% before collapsing. So that's the danger of getting greedy with this technique. And what else is there? You can also change this. This is how long we wait for a profit or a break even. There is also a stop loss. So I've put it at 80%, which means it doesn't really use a stop loss. This means the stock would have to fall 80% before it's sold. So you can put in like a 10% stop loss. We've put in a 10% stop loss, but you see now our profitability has gone way down. And maybe the stop loss didn't really help at all. So for this reason, I tend not to use stop losses. My strategy is to buy high quality stocks. And I actually bought here last year, and then it collapsed like 50%. And I ended up making a profit because it had this huge drawdown here, and then it did recover. I normally hold them for 2 years because that's normally the length of a business cycle. You can see this with Meta. Where's 2022? So it had this huge disaster in 2022, but by 2024 it had totally recovered. So with so many stocks, 2 years seems to be a good time to let these stocks recover and just do its thing. So we got the settings, so it's not so profitable, but there are more signals. So let's change that to a better low. So that didn't work very well either. So the default settings I've optimized really. So 20 and a 52-week low does seem to be the best. I've broken it now. I had the stop loss on. You can go here and go to reset settings, and then it's back to normal. Now every trade is profitable pretty much. So to summarize, give the Pine script a go and let me know if you come up with any optimizations for it. You can also bookmark btfdbot.com and visit it in the next downturn. These super oversolds appear on the homepage, and there's usually quite a lot of them if there's a crisis. I hope you found that interesting and useful. Thanks for watching.